The crypto market has been in a downtrend on the intraday level since the 27th of May. As you can see, that was the day we topped out right here, and after that we've been trending to the downside on the intraday levels. But take note, we're still within the bullish range. So if we look at this on the monthly time frame, you can actually see that we're still bullish overall. Price has consistently been creating higher highs and higher lows. The reason why I always like to go through this before anything else in my analysis is because when you don't have a better understanding of the bigger time frame perspective, it's very difficult to have a bias in the market. And right here, we've already determined our bias in the marketplace, which is for price to go to the upside, irrespective of the fact that we're seeing the intraday bearishness. That doesn't change the fact that we're bullish. And if we look at this right here, we can see within this range high and range low, we were trending to the downside, creating lower highs and lower lows right here before, as you can see, price expanded to the upside, breaking this weekly structure. After a break of weekly structure, we go to the monthly time frame, and on the monthly time frame, we can see very clearly we have this inefficiency resting right here. So we're anticipating for price to mitigate that inefficiency, and as you can see, after that break of structure, we came back down to mitigate that position. After that mitigation, we saw an expansion, solid expansion, and then we're seeing this retracement. You can see that when price wants to go to the upside, it goes to the upside one way. It just goes to the upside. It doesn't take too much time to go to the upside, and when it's coming to the downside, it takes forever to come to the downside. You can see us coming down here. It literally took forever, and then when we went up, it literally took 2 candles to go to the upside. Coming down, it's taken us 1, 2, 3, 4, 5 and 6 candles, and these are weekly candles. So within the past 6 weeks, price has been trending to the downside on the intraday levels. And right here you can see so far we have a high right here on the 4-hour time, on the daily time frame, and then we created a low right here, and as you can see, we have a break of structure as well. After this break of structure, I wouldn't be surprised to see a retest, potentially retesting the last down close candles before expansion, and this right here is the last down close candles, as you can see right there. So if price is going to come to the downside, this would be an area that I'll be watching very closely. Now, it doesn't mean that the moment price mitigates this area, I'm just going to jump in and buy. That's not what I'm saying. What I'm going to do is, if we do eventually come in here, I'll be looking for a shift in market structure on the 15 minutes time frame. If I see a 15-minute shift in market structure, then I will be looking for a buy. So it's going to be a 15 minutes or a 30 minutes shift in market structure. So if I see any of the two, whether it's a 30 minutes or 15 minute shift in market structure to the upside, then I'll be looking for a buy on Ethereum to potentially continue higher, because overall I still remain bullish on Ethereum. And if we look at this right here, this is low resistance liquidity resting right here as well. So anything bringing price to this high again, I won't be surprised to see price rallying above it to take this buy side liquidity resting right here. And if we also scale down to 4-hour time frame, you can see how nicely price is piling up more and more liquidities, low resistance liquidities. You can see that here, low resistance liquidity, low resistance liquidities resting right here as well. So that is what I'm watching, and I'll be watching this very closely. And I wouldn't really be surprised to see a displacement to the downside here. So I got into a buy around this key level, and I also got into another buy from here as well. So my first entry was this down close candle right here. I used the inefficiency as my entry. Second entry was right here, and then third entry was right here. And after price expanded higher to break above this high, I trailed all my stop losses to break even, to allow price to do its thing, because I believe that if we're bullish, there's no need for price to come back here again. But eventually price still wants to go to the downside, so it came back down and took me out and break even. But that's the thing with trading. You always need to protect your trades. When it's in profit, take profit when you can. In this case, it wasn't really in any huge profits. It was just not so much. I think I was risking around 0.3% per entry, and all the entries I had were up about 1% of my account. So that was why I trade stop loss to break even. Then once it goes higher to like 2%, 3%, that's when I start to move stop loss to profit, start to scale out some profit, but we didn't get there. So, but that's okay. That's part of trading. Your trade should end in either a break even, small loss, small win, or a big win. Never allow it to go into a big loss. So that is the reason why I had to cut it short and leave the market at break even. So that is what I'm watching in the marketplace. If you enjoy this content, you can just do all the YouTube stuff, like, comment. If you have any questions, feel free to drop it in the comment section. I'll talk to you all in the next video.